Today, business groups asking the White House to hold off on its vaccine mandate, at least until after the holiday season. What are the concerns? Big consumer brands like Unilever and Procter & Gamble are increasing prices, and they're confident you will keep paying for it. And one financial regulator is considering how to let banks hold cryptocurrencies, but what are the obstacles? That and much more coming up on NTD Business. Good evening. Great to have you with us. I'm Paul Graney. Business groups are pleading with the Biden administration to delay its COVID-19 vaccine mandate until after the holiday shopping season. They're worried the mandate could make labor shortages and supply chain problems even worse. White House officials met with business groups last week as the administration carries out its final review of the mandate. The American Trucking Associations warned that many truckers would likely quit, then get vaccinated. The industry is already short 80,000 drivers. It estimates trucking companies could lose around 37% of drivers to retirements or resignations because of the mandate. A retail industry group also warning a mandate could drive around 30% of unvaccinated workers to quit. Business groups want to delay the mandate until late January at the earliest. But officials have a new plan to ease the backlog at the nation's busiest port complex. They say they'll start fining shipping companies whose containers linger for too long. The twin ports of Los Angeles and Long Beach say containers scheduled to be moved by trucks can stay for 9 days before fines start. Containers set to move by rail can stay for 3 days. The new rules go into effect November. About 40% of all shipping containers entering the United States come through Los Angeles and Long Beach ports. Right now, there are 77 ships carrying $24 billion worth of goods waiting to be offloaded. Economists expect shipping problems to persist into the middle of 2022. And Democrats are facing obstacles to the latest tax proposal. Leading Republicans are against the plan, which would tax wealthy Americans as their assets appreciate in value, not just when they profit from them. Senate Minority Leader Mitch McConnell says the plan amounts to taxing Americans on money they haven't even made yet. Senator Mitt Romney asks, how do you determine the value of assets like real estate, paintings, and jewelry, even though the Treasury Secretary says the tax would apply to liquid assets like stocks and bonds, not hard assets. Democrats, though, generally seem to be on board with the plan, but it's unclear if Senators Joe Manchin and Kyrsten Sinema will back it. They recently broke ranks in opposition to other progressive proposals. The Democrats can't afford to lose any votes in the Senate, assuming all Republicans vote against it. At least one Democratic congressman thinks the tax plan will be too hard to implement. How do you handle assets that go up in value one year and down in value the next? As asks Representative Jim Himes. So joining us to discuss the new proposal is Lance Roberts, Chief Strategist with Real Investment Advice and Investment Manager, helps manage over $1 billion in assets. This specific tax, do you think it creates a kind of perverse incentive for the government? So if they're taking in all this money from appreciating assets, we hear people saying that the stimulus packages, whether the Fed or the government, are causing bubbles in housing or the stock market or whatever. You think it creates a kind of perverse incentive for them to bail these sectors out if the S did hit the fan?
Well, the answer to your question is yes. You know, the problem is, again, if you provide a disincentive to invest, and that's what you're doing, right? So the whole benefit of investing is that I can invest into a stock or a piece of real estate, and I can grow that value over time and not pay taxes on those gains until at some future point I can pay taxes one time and have my capital. But once you start taxing me every year, that is no longer an incentive to invest long term. So incentives to invest will change. How I invest will change. And where, and this is the most important thing, where I invest will change. In other words, if I provide a disincentive to invest in the U.S., as somebody with $1 billion, I wish I had $1 billion, but if I had $1 billion, right, I would invest where? In other countries where I don't have that disincentive, or I would invest in other measures that avoids that tax structure. You know, there's one thing that you can always count on with really wealthy people is they'll figure out a way around the tax.
We talked recently about the tax code, about a month ago, 2 months ago now. Is there an argument from the Democrats that's legitimate, like these wealthy people, well, they never sell their assets, right? So they'll just borrow against them or they'll pass them down to their kids tax-free. Is there a problem with the tax code, or you feel that, this is their wealth? Do we really need to chase them for their wealth?
Well, the thing is look, we have to really look at this from two perspectives. One, capitalism is what created the wealthiest country in the world. And look, when you're talking about the U.S., you're talking about somebody that makes $30,000 a year in the U.S. is in the top 1% of income earners worldwide. The wealth of the U.S. is not a little bit greater than the rest of the world. It's head and shoulders above any other country in the world. And that engine of economic prosperity has come from the rule of law, from a tax structure that benefited those that took risk. And let's not forget that what this is all about, people that took risk with capital, they went out with capital, they took risk of losing everything to invest in a business and to build something. We're now wanting to penalize them for taking advantage of the capitalistic structure. But that's a net negative when we do that for all the up and coming generations. They will no longer have that opportunity to invest for that kind of wealth generation and that wealth creation. So yes, we can certainly go after the wealthy, but once we do that, we take away the very engine of economic growth where this wealth actually came from. So, it's important to remember that the tax code is a behemoth thing. And, don't hate the tax rate. This is the one thing we've said often is, you do nothing about making small adjustments to the tax rate. If you want to fix the tax code, that's a different story. If you want the wealthy to pay more, if you want them to extract more capital from them, you've got to change the tax code, get rid of the loopholes, the write-offs, the charitable donations, all the other things that they can take advantage of to reduce their taxable liability. But there's consequences. If you reduce the charitable giving tax deduction that we get, think of all the massive charities in this country that do wonderful things, from St. Jude's Hospital, all the way down the line, United Way and others that do great work in this country. And they are solely dependent upon those tax-deductible donations of charitable giving to run their organizations. You take that away because you just want to get more money out of rich people, you destroy some of the major charitable organizations in this country. So, it's not easy to fix the problem, because there's a cost and a consequence for every action you take. But this isn't a well thought out process of how to get more tax revenue. This is simply a quick fix, a stab at a bucket to try to appease some people so we can pass through another $3 trillion worth of spending. We need to start thinking about the debt first and then worry about the taxation about it later.
There you go. Lance Roberts, RIA Advisors. Appreciate it. Thank you.
You're welcome.
And stock indexes closed slightly higher today. The Dow and the S&P 500 had fresh records. The Dow rose 16 points, or S&P 500 gained 8 points, about 0.2%. The Nasdaq added 9 points today. And in big news for the crypto community, a top U.S. bank regulator says it's looking to provide a clearer path for banks to hold crypto. The Federal Deposit Insurance Corporation says regulators need to allow banks to operate in the space while managing the risk. It's afraid if they don't bring the activity inside the banks, it's going to develop outside of the banks, where it will be impossible to regulate. The roadmap includes clear rules over holding crypto in custody to facilitate client trading, using them as collateral for loans, or even holding them on banks' balance sheets like more traditional assets. But there are challenges. For example, cryptocurrency is a volatile asset right now, so how can it be used as collateral? And despite the recent whistleblower document dump, Facebook earnings have beaten analyst estimates. In the company's earnings call, CEO Mark Zuckerberg started off by defending his company from, quote, coordinated efforts to paint a false picture. NTD's Fake Quarter has more.
Facebook's profits brushed aside recent controversies and beat quarterly estimates. The company made $3.22 per share, while analysts estimated $3.19. However, they missed on revenue, with $29.01 billion, while Wall Street expected $29.57 billion. CEO Mark Zuckerberg started the company's earnings call by addressing recent controversies.
I believe large organizations should be scrutinized, and I'd much rather live in a society where they are than one where they can't be. Good faith criticism helps us get better. But my view is that what we are seeing is a coordinated effort to selectively use leaked documents to paint a false picture of our company.
Zuckerberg says they need to balance competing social equities, and that it makes a good soundbite to say that we don't solve these impossible trade-offs because we're just focused on making money. However, even early Facebook investor and Zuckerberg mentor Roger McEnany has a different view.
The whole business model, if you will, is designed to essentially maximize anger and fear in the users in order to profit from them. We need to have competition. When Facebook went down a couple weeks ago, the millions of people who depend on Facebook for their business lost their marketplace. And you have to have the ability for alternatives to exist so people are not so dependent.
Meanwhile, the company had 1.93 billion daily active users, the same as average estimates. But they had 2.91 billion monthly active users, while analysts expected 2.93 billion. And Zuckerberg reiterated his goal of transforming Facebook into a metaverse company.
Really, Mark?
Facebook expects metaverse investments to reduce operating profit by $10 billion in 2021.
This is not an investment that is going to be profitable for us anytime in the near future. But we basically believe that that the metaverse is going to be the successor to the mobile internet. I would say later in this decade is when we would sort of expect this to be more of a real business story.
And Facebook will make significant changes to Instagram and Facebook to focus more on the Reels feature. The company wants to attract more young adults in an effort to compete with TikTok, which Zuckerberg called one of the most effective competitors that we have ever faced. Faye Quarter, NTD News.
And General Electric raised its full-year earnings forecast today. It's after a recovery in its jet engine business helped it report higher than expected quarterly profit. But the company says it faces a challenging operating environment. Like other manufacturers, GE is grappling with both a labor crunch and shortages of raw materials like semiconductor chips. It expects the supply constraints to persist through the rest of the year and into 2022. It also expects inflation to have a worse impact next year. Company's CEO says he isn't sure where the company stands right now. He says compared to financial predictions to playing whack-a-mole. So if the chip shortage has got you down and you can't get that new car, well, how about you get the new car feeling at least? With us is Tom Wolf of Ziebart International. Tom is the Executive Vice President there. Ziebart provides premium services for car interiors and exteriors in over 400 locations and across 1,200 service centers. So Tom, great to see you on the show. Thanks so much for coming on. Can I ask, how have people's spending habits changed through the pandemic and subsequently through these supply chain shortages like the chip shortage we're seeing?
Hey, Paul, thanks for having me. I mean, the big change really that has happened has been really a focus onto the used car market because the availability of the new vehicles really aren't there. And what the manufacturers have been doing is they've been allocating their chips to really the high-end vehicles, the high-end pickup trucks, the high-end SUVs. So that may not be for everybody. So now this focus has been on the used car market lately.
Mm-hmm. And how has that come down to you guys? Of course, you service used cars. You can get that new car feeling. I've seen some awesome videos of you tidying up interiors and exteriors. Have you guys seen a bump in your business?
Yeah, absolutely. The used car market it's a huge market. It's actually a bigger market than the new car market. And what has happened is you've had the shift to these used vehicles, and people purchase these vehicles, and a lot of times new vehicles can be leased, but with that investment in ownership in the used vehicle, you've got people that want to protect these vehicles for a long time because they've made the investment to purchase these, so they want to protect them and accessorize them to make them their vehicle.
How about the shortages, the supply? We see the ships lined up at Long Beach. Have you guys facing any shortages? Have you been forced to raise any prices because of them?
We have had to raise some prices, our manufacturers, of some of our chemicals and things like that because of the supply shortages have raised some prices, and we've unfortunately had to raise prices in response to our franchisees. But we've got some pretty good relationships, and most of our price increases have been very minimal, throughout the year. So that has worked for us in staying competitive out there in the marketplace.
Because I assume if you guys have to raise your prices, your competitors are probably raising the prices as well. Do you feel when this irons out, are you guys forecasting the prices will stay high? Is this the new normal, for want of a better phrase?
The biggest price increase has been in, as you know, like in the kind of like the plastics market. Remember earlier this year when Texas was hit with all of that bad weather, it really affected the production of the like isocyanates and resins that are made into plastics and truck spray-on bed liners. So we've seen the most increases in the spray-on truck liner market. Everything else has been fairly steady without a lot of price increases, but that's the biggest one that we've seen, and actually a couple of them throughout the year.
Very good. Good to hear. Thomas Wolf, Z-Bart, appreciate it. Thank you.
Thank you, Paul. Appreciate it.
When it comes to electric vehicles, you could say Americans are buying Teslas, but not really EVs in general. But with more and more contenders joining the market, that could soon change. NTD's Faye Quarter has more.
Tesla accounts for most of the electric vehicles sold in the United States, including 79% last year, according to IHS Markit. But that's starting to change. Hundreds of new models are expected by 2025, and they could start eating away at Tesla's market share.
We're going to see a quadrupling of the number of battery electric vehicles out there in little more than a year. And 2022 will not be the end of it. It'll continue to accelerate.
Automakers are investing billions of dollars to develop new electric vehicles to compete against Tesla. Big names such as General Motors and Volkswagen making the transition to electric. And there are more.
But on the high end, we're going to see a number of other manufacturers. We could see players like Audi and BMW and Mercedes give Tesla a run.
Eisenstein also mentioned some new contenders.
I just had the chance to drive the first Rivian with their R1T pickup. And that could short circuit Tesla's attempt to launch the Cybertruck. Then there's Lucid, which just got an EPA rating that tops on one model 500 miles per charge. And that could be a real kick.
Although the EV market is booming, there are still obstacles to widespread adoption, such as consumer education and support from the U.S. electrical grid. Eisenstein says one of the biggest challenges is the lack of charging infrastructure.
You hope that there will be about 500,000 chargers around the U.S. alone to really support a transformation from gas to electric. That's going to be difficult, but not impossible.
IHS Markit predicts electric vehicles will make up about 40% of the U.S. market by 2030. Faye Quarter, NTD News.
And General Motors said today it plans to install up to 40,000 EV charging stations in the United States and Canada. And the spike in home prices may be losing some of its sizzle, but home sales are not. Sales of single-family homes surged to a 6-month high in September. New home sales jumped 14% for the month. The level is still much lower than the same time last year. Meanwhile, home prices keep rising. The average sales price in September was over $451,000. That's up 12% year over year. Home builders are still facing labor and material shortages. Of the 380,000 homes sold last month, 106,000 of them haven't even started construction yet. And Procter & Gamble, Nestle, Chipotle, Unilever, you name it. Many brands have announced price hikes because of inflation, but many are confident you'll keep paying for them anyway. NTD's Evelyn Lee has more.
Consumer giants like Procter & Gamble and Nestle are betting that consumers are willing to pay more for their products. Like many others, they say that price increases didn't turn their customers away.
We expect to progressively increase pricing in a responsible manner over the remainder of 2021 and 2022 with different trends by geography and category.
Gillette razors, Nestle coffee, and Chipotle burritos could all be getting more expensive soon. That's after Unilever and Kimberly-Clark hiked their prices. But so far, it's paid off, with shoppers staying loyal to big brand names. So now companies count on customers to offset higher costs and improve their bottom lines.
The exact timing and amount of increases vary by brand and sub-brand in the range of mid to high single digits. As opportunities allow, we'll close couple price increases with new product innovations, adding value for consumers.
Procter & Gamble says the company will combine the higher prices with product innovation. And with more perceived value, the brand expects to continue to grow markets. Chipotle told CNBC that strong value proposition gives the brand plenty of pricing power.
What we continue to hear from consumers is, they love our food ethos around food with integrity. They love the customization. They love the speed. They love the access.
Ben Reich, CEO of Data Assembly, says that consumers absorbed shocking price increases without a dip in demand. Greg McBride, Senior Vice President and Chief Financial Analyst at Bankrate, says consumers are still sitting on an excess of savings since the pandemic started, and on top of that, pay is going up. But once price increases outlast the pay raises, customers will likely look for cheaper substitutes. Evelyn Lee, NTD News.
And some major social media companies face Congress today, a couple for the first time ever. The topic, how to protect children online. NTD's Phil Zoe reports.
TikTok, Snapchat, and YouTube all on Capitol Hill Tuesday, discussing how to make their apps safer for children.
Parents of America cannot trust these apps with their children.
TikTok and Snapchat need to be in the hot seat right now.
Executives from TikTok and Snapchat defended their companies.
Intentionally make it harder for strangers to find minors by not allowing public profiles for users under 18.
People under 16 have their accounts set to private automatically.
Jeff Myers is president of Summit Ministries. He's worked with over 60,000 high school and college students in the past year alone. He's concerned.
The things that get shared on TikTok become the entire world for a lot of young adults. They assume that what's being shared there is what's really happening. It's almost like an addiction. And the more time they spend on technology, the more depressed and anxious they become.
Sam Sorbo is a kids education influencer. She's the host of Schools Out on Epoch TV.
We have evidence that they're preying on the children, and I don't see really any action. I get that they're having a hearing. To me, a hearing is not a listening. It's just show for you and me so that we can comment on it.
And on the mental health side,
they claim to have safety protocols that will protect kids from seeing sex, violence, things about eating disorders, things about suicide, the kinds of things that kids should not be exposed to.
Snapchat says is different from other social media. Myers says doesn't matter which app kids use, the less technology, the better.
As soon as we can get people off of the dependence on these channels and talking face to face, the better off we'll be. That hasn't changed in several thousand years.
Phil Zoe, NTD News.
And still to come this evening. Blue Origin is teaming up with Boeing to build a business park in space. So, when do they hope to launch it? And what do they hope to accomplish? And Brazil's beaches welcome tourists back after nearly 2 years of shutdowns and restrictions. What does it mean for the local business and the economy? That and more coming up on NTD Business.
Hello, I'm Mike Lindell, inventor of MyPillow. Thanks to your support, you've helped make MyPillow become one of the fastest growing companies in America. Over the last 12 years, you've helped MyPillow create thousands of jobs right here in the USA.
When I got MyPillow, I'm asleep almost immediately. I stay asleep at night and I wake up more well-rested in the morning.
That's why I invented MyPillow. My patented fill adjusts to your exact individual needs and helps keep your neck supported and aligned. I'm interrupting this commercial right now. Retailers have canceled MyPillow, and to thank you for your support, I'm going to pass the savings directly on to you. For example, you get my 6-piece towel sets, regular $109.99, now only $44.98, or MyPillow dog beds for as low as $19.99 with your promo code.
For the best night's sleep in the whole wide world, visit mypillow.com.
The final end. The end of mankind. The end of this wretched world. I came as a man of peace and the world bought it. Can you believe that? They even took the mark of the beast. Fools! Why did God even make human beings?
To glorify his name. But we were fools, and many will spend eternity in hell.
May God have mercy on their souls.
But fools are fools are fools. Satan loves fools, and so do I.
Welcome back. Jeff Bezos' Blue Origin plans to develop a commercial space station with Boeing. It's called Orbital Reef. They aim to launch a spacecraft in the second half of this decade. The venture will be built in partnership with Sierra Space. That's the spaceflight wing of defense contractor Sierra Nevada. It's also being backed by Arizona State University and a couple other partners. Orbital Reef will be operated as a mixed-use business park. They hope the project will provide the infrastructure needed to open new markets in space. Exciting. And beach vendors in Rio de Janeiro are taking advantage of mild weather and the growing number of visitors. They hope to recover from 2 years of shutdowns and restrictions that have battered the economy. NTD's Andrew Thomas reports.
When the pandemic started, beaches in Rio de Janeiro were closed from March until November. After 5 months open, restrictions returned as pandemic deaths increased in Brazil in March 2021.
At the beginning of the pandemic, it was very difficult. We couldn't rent sun umbrellas or chairs. I also did not have the government handout, so I was practically without income.
Rio de Janeiro has fully vaccinated more than 7 million people. Now, tourists are flocking back on weekends, bringing hope for those who depend heavily on them. Waldemir de Lima has owned a kiosk at Copacabana Beach since 1972. He said business is slowly returning to normal.
We employed around 5 or 6 men, head of the house. We helped around 6 families. In the pandemic, everyone left because not even we could be here. So imagine helping other people. But now it is starting to get back. We already have 2 new employees. Thank God it is getting better.
As the country's economy struggles, informal workers are looking to Rio's beaches, selling everything from bikinis to refreshing drinks and fried shrimp. They hope improving weather will lead to better sales and expect New Year's Eve and Carnival could bring thousands of tourists not seen since the pandemic started. Andrew Thomas, NTD News.
That's the latest business updates for today, but you can still catch NTD Evening News. That's with Stephanie Cox at 6:30 p.m. Eastern. For NTD Business, it's all for today. Thank you for watching. We'll see you tomorrow.
Thanks for watching us on YouTube. Don't forget to catch all of our programs on TV. NTD Evening News is on every weekday at 6:30 p.m. Find your local NTD channel at ntd.com/TV.